whether you are a bull or a bear, I think both sides would admit that every once in a while, every year or two, there is a larger crash in the cryptoverse, which of course would be nice to avoid if you knew it was coming. Now, of course, it's impossible to know when those larger events are going to occur, but there is something that we can potentially look at in the stablecoin market that might give us a glimpse into that. And so I will be the first to tell you that all models are wrong. Some are useful. I certainly wouldn't take a single model to the bank and ask them to cash it in. What I am saying is that using this has been a pretty good predictor of larger drops in crypto. And so we want to see where it is now and what that would mean for the future. So this here is the USDT dominance, right? So it's the Tether dominance. And we can also add in USDC dominance, and we'll probably do that in a little bit. But I want you to take a look at this chart. Now, it's on a linear scale, and that's how I think we should observe it. But I want you to just take a look at this chart. And what you will quickly notice is that there has been a clear trend of higher lows on the USDT dominance chart, right? In fact, if you were to go back to 2018 and connect the dots, what do you notice? There has been clearly a series of higher lows, but each of these higher lows that tagged this trend line was a huge warning signal to the cryptoverse when the trend line was tagged. Let me show you what I mean. There's several different examples here. This one and here. Even here we got pretty close. That trend line tag right there. This one and this one. Now, we're going to go through each of these. What's this one? November of 2021. What is this one? March of 2021. March, April. It was basically February, March, and April of 2021, but it basically left the trend line in May, right? So really, I guess, early May 2021, just before we had like a 50% drop in crypto. Okay, so those are the first two examples. What's the next example? February of 2020. February 2020 was right before the pandemic drop. June of 2019. This one here, November 2018. We'll get to that one in a minute. This one here, January 2018. Okay? So that is when this trend line has been tagged. It's kind of an interesting thing. All of these dates should mean something to you, right? They all should mean something to you if you've been in crypto. I bet everyone knows the significance of November 2021, right? That actually marked the top back at 69K for Bitcoin. May of 2021, what happened then? Let's just overlay Bitcoin onto the chart so you guys can see it for yourselves. Let me make this a color that we can see a little bit easier. Line them up. This tag of the trend line right here, November 2021, corresponded to that peak. This trend line, when we left it, corresponded to just before that drop. February 2020, when we tagged it, just before that drop. June of 2019, just before this drop. November 2018, this is probably one that you might think, well, wait a second, that was near the end of the bear market of 2018. Well, it was, but it also came just before a 50% drop. So yes, it was near the end of a bear market, but we still had a lot further to fall. January 2018. What do you notice about every time this trend line was tagged? Bitcoin had a larger correction, right? Not one of these little baby corrections where it pulls back 20, 25, 30%, but a larger correction, at least a 50% drop after the trend line was tagged. Now again, I'll be the first to say that 50% drops in crypto can occur at any time. And it's always possible. We're in the middle of one right now. But I will say that, you will drive yourself crazy constantly trying to anticipate a crash. I will say that this trend line here, when it has been tagged in the past, has not been a good signal. Now, where is it right now? Well, right now we're up at about 6%. Where is the trend line right now? Let me grab a price label, and let's just put it in May. About 4%. So, and you can see previously when we hit it, there it was 2.43, 2.14, 1.43, 1%, 0.74, 0.25. Clearly a trend of higher lows. 4% seems pretty far off right now, but in the grand scheme of things, it's not really, when you consider that in October, we were at 8%, and just 3 weeks ago, we were at 5% almost. We almost hit 5% just a few weeks ago. So if crypto were to go back here, right, then we'd only be 1% away from this trend line. Now look at this. Look at the bull market support band for USDT dominance. We're coming up to it right now. Right now. In fact, if you zoom in, you will see that we just had a wick directly up to the 21-week EMA, which is funny considering that we are very close to the 20-week SMA. In fact, we would only need to see USDT dominance go up about 4 to 5%, and there you have it. It's at the 20-week SMA, which is coincidental because Bitcoin happens to be about 6% from its bull market support band, the 21-week EMA. So you have, on one hand, you have Bitcoin sort of fading here, and I don't know if it's going to tag here or not, but imagine if it did. Imagine if it did tag the bull market support band, and imagine if USDT dominance came all the way down here, which again, I don't know if it's going to. But imagine if it did. Then history would suggest that it could be time for a larger correction in that type of scenario. Now, that doesn't mean that you can't have corrections, even throughout this entire time. I mean, when dominance was way up here at 6%, and it was at 30K, we still saw a drop 50% to 15K, right? So that's not to say that you can't have corrections when USDT dominance is high. We know that you can, and we've experienced it many times. I'm just simply pointing out that all prior times where USDT dominance hit this trend line, that is where there was a much larger trend reversal in the asset class. Right? Now, there's a caveat to this, and I would be remiss if I didn't at least mention it, because this is a linear scale, right? It's a linear scale. And that's certainly one way to look at it. In fact, I think it is the more worthwhile way to look at it. I think looking at percentages on a log scale doesn't really make a whole lot of sense. Be that as it may, to flip this to a log scale and to connect the same trend lines, basically, you would see that we're actually already at it. Right? You'd see that we're already at it. Again, I don't know how much trust to put into the log version of this chart versus the linear. I think linear makes more sense. And one of the reasons I would say that would be because if you add up USDT dominance plus USDC dominance and perform the same exercise on a log scale, if you were to connect the dots, you can see that it already broke below, right? But on the other hand, if you flip it to a regular scale, if you flip this USDT dominance plus USDC dominance to a regular scale, you can see that it has not yet broken, right? And you can see that there's periods where it tagged it and then it went up. One of the reasons why this has been the case, that, you know, USDC plus USDT dominance looks so much different, is that the market cap of USDC went down a lot, right? I mean, like, it's trying to gain back some market share now. It's trying to, but it's been mostly going down for a long time. Whereas if you add on here, so if we take USDC dominance plus USDT dominance, you can see that it's moving up. But it's because USDT dominance is moving up a lot more recently than USDC. Okay. So I guess the question is will Bitcoin hold support or not? If Bitcoin is unable to hold support at, you know, the bull market support band or somewhere above it, if it's unable to hold support, then I imagine perhaps looking at the log version of the stablecoin dominance market cap would be better than the linear version. If Bitcoin holds support here and bounces into the halving, like if Bitcoin gets some type of if it finds some type of support down there or here and bounces into the halving, if you go look at market cycle ROI, right? And you look at sort of where we are right now, right? Like we're actually kind of right in between where we normally are at this phase. It shows you the current cycle, the purple line, with the last two. And you can see that the last two cycles had another push higher, but it didn't come until, you know, about day 500, which is about 2 months from now. Well, 2 months from now is March, the end of March, meaning you're knocking on the door of April, which is in fact the halving. Now, when you think about it, crypto has been very much following these narratives, whether it was Ether pumping up into the merge, whether it was Bitcoin pumping into the spot ETF, whether it might be Bitcoin getting some type of renewed interest going into the halving. Who knows, right? But that's about 2 months from now, March, late March, early April. And so I have to wonder, well, that I think is what we have to look at, right? Is does Bitcoin hold support? If Bitcoin holds support in this area and bounces out of it, then does USDT dominance go back to this longer term trend line? And if it does, would that be a signal to the market that things are very, very overheated? Again, right now, we're just simply at 6%. We were at 8.5% over here. This trend line would put it at around 4%. So it's really hard to say. If Bitcoin were to fall back in to where it was previous, or sorry, if USDT dominance were to fall back into where it was previously, it would already be at 5%, which again is only 1% away from that trend line, right? To go from, well, I mean, depends on how you measure it, right? But, you know, from 5% to 4%, from here to here. And you saw how quickly it went from 8% down to 5%. I mean, it did it within just a couple of months. Late October until really early to mid-January. So about 2.5 months, we went from 8% to 5%. Now we've gone all the way back up to 6.32% at the bull market support band. So that's going to be something that I'm going to be watching over the next few months, is can Bitcoin find support in this range? And if it can, and it bounces, then of course we'll have to see if it can actually take out the prior highs. Note that in 2019, it did not take out that long wick to the upside. It just put in a lower high. In 2021, after this long wick, we eventually swept that high. So I think this is a useful metric. I'm not asking you to take it to the bank, right? They're not going to cash it in. I can promise you that. But in terms of being an investor in the cryptoverse and understanding that there are occasional 50% drops, this is one of the metrics that could give you insight into that. Now, remember, we've had 50% drops even when dominance of USDT was way up here, right? We have. If you think back to, right here, right? In March of 2022, USDT dominance was at 4% and it went up a lot. So just because you're at a high USDT dominance level doesn't mean that you can't have a 50% correction. So I don't think that this indicator will tell you about every 50% correction that's about to occur, but history shows us that it might be useful in identifying some of them. And so if we find USDT dominance at 4% sometime by, in the next few months, in the first half of the year, then it could be a warning sign that there's about to be a larger rotation within the cryptoverse. Remember, if Bitcoin gets a bounce, let's call it off of, I know some people think that it's already found a local low, and they could be right. I don't really know. It's possible that 38.5 is the local low. But if it's not, and Bitcoin falls back in, remember that next range you're looking at is 36 to 37K. So $36,000 to $37,000. So if it falls back in here and USDT dominance rises up to there, and if Bitcoin bounces off of that level, which again, remember, Bitcoin has typically visited that bull market support band around this time in the cycle, February of the halving year. It seems to be this recurring theme. February of the halving year, we find ourselves at the bull market support band. Now, last cycle, we found ourselves not only at the bull market support band, but quite a bit lower than it. And so that was, of course, an issue. But note that in February of 2020, we had already tagged this trend line on a linear scale. The other thing that I would like to see happen at some point is I'd like to see the Ether Bitcoin valuation breakdown, right? Right now it's at 0.055553, so 0.0553. It has had a bit of a bounce here, which, again, we said the further we get into January without a weekly close below the prior range low, the more likely it is to get a bounce. We got a bounce, right? Well, so what, right? We got bounces over here too, and we got bounces over here too, and eventually it still faded to the downside, right? Here it broke through in October, right here it broke through in July. So sort of the question mark. Remember, when it broke through in July of 2019, it broke through right as the first rate cut arrived. And the first rate cut is potentially pushed out until May. Maybe we won't get one in March. And remember, last cycle, Bitcoin topped out about a month before the first rate cut. So maybe that would lead us to believe that if rate cuts occur in March, then it's more likely that this could be a local top for a while. But if rate cuts don't occur until, say, May or something, then maybe there's an increased chance of getting back to those levels. The reason I'd say that is because rate cuts would sort of be indicative of something wrong, right? Especially with inflation as high as it is. So as long as the Fed keeps pushing out when the first rate cut is, then it sort of implies that the market or that the Fed's not too concerned about the market or the economy. But once rate cuts arrive, that's where Ether Bitcoin, at least last cycle, broke down. And just a little bit after that, that was where Bitcoin dominance topped out. So hopefully we can use this in the future to better understand when larger corrections in the cryptoverse might occur. just simply looking at a trend line on USDT dominance. And also to remember that you could flip this to a log scale and potentially say that a warning signal has already arrived. I think I would prefer the linear scale. Linear scale seems like it makes a bit more sense than looking at it on a log scale. But if there is a larger correction in crypto right now, like let's suppose we don't hold support at the 20-week SMA and we go further down, like let's say we go to the 100-week moving average, then I imagine we might take a closer look at this and say, all right, maybe it's worthwhile to look at it on a log scale instead. That's where we stand. That is just what I wanted to provide analysis of today. USDT dominance. We also looked at USDT and USDC dominance together. And I think by looking at the market through the lens of stablecoins, it might give us insight into some, but not all, future larger drops in the cryptoverse. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up.